Hello, Ross Mack and Yahoo Finance. This is 𝐼𝐸𝐾𝐭 coming to you live from Atlanta, also known as
Charles.
Wall Street Consortium on IG. My question to you, Ross, right now, what would you tell investors who are new to the market and
Mhm.
seeing all this chaos going on, how to handle their portfolios, and to investors who have been in the market for 20, 30 years, especially in 401ks with their companies, what they should be doing with their portfolios? Maybe give, your top three for both of those questions. Anyway, thanks a lot. Have a great day. Talk to you later. Bye.
I love the question, Charles. Listen, to anybody that's just now starting to invest, this is the perfect time, right? One of the greatest sayings in the world is, from an investment standpoint, is be greedy when others are fearful and be fearful when others are greedy. And by definition, when there's chaos in the market, that is a time to actually start stepping in and buying, right? That is when true wealth is built, right? And if you think about 2008 and all this was happening, people, you bought real estate, guess what? Your property appreciated several 100%, right? And so, what I say to a person that's just now investing, keep it simple, but the most important thing is you want to remain consistent and disciplined. And what I mean by that is not saying, okay, I want to start investing and how much do I need? No, the idea is how much could I afford to invest on a monthly basis? And I think to those new people that are starting out, you want to put a couple hundred, dollars every month into a few ETFs, exchange traded funds, which are a basket of stocks. And the way to think about this, the most common and the one that I always recommend is the S&P 500. This is on average going to give you an annualized return of about 10%, meaning some years is going to be higher, some years is going to be lower, but on average, you're starting out saying, I'm going to buy every part of the market, right? 500 of America's biggest and best companies. And I think that's what you want to do for that new investor. Remember, stay disciplined and stay consistent and set it on autopilot, meaning auto investing. You don't even have to think about it. And to those, people that have been in the market for over 20 years, now's not the time to deviate from your plan, right? You've been here before. You saw it in COVID. You saw it with Liberation Day. You saw it in 2000.com in 2008, right? Uh, you saw a ton of different cycles in the market. And I think now is not the time to actually deviate from your plan. The only thing I will say is maybe assess what you have, right? Do you want to be overly extended to, tech names or semiconductors, right? What I want you to do is actually look at what you have and potentially rebalance. But more importantly, you want to look at things from your overall investment horizon and what your overall, risk appetite is. And what I mean by that is, as you get near and closer to your retirement, you don't want to have a portfolio 100% tech and cryptocurrency because those are extremely volatile, right? We're seeing a lot of big names down 10, 20, 30%, and obviously crypto down over 50% from its highs this past year. And so what you want to do is say, okay, let me rebalance, but you don't want to deviate from your plan and just like panic sell. So that's what I would say, but I love the question from Charles. Next question, talk to me.